This idea is one of the biggest ticket items, because if we do what I'm suggesting, we could save over $1 trillion over the next 10 years. That is a big, big number. You know, when we were doing reconciliation, we were pulling our hair out to save $50 billion or $100 billion. $1 trillion is a lot of money. Now, what does this issue mean? So banks, big banks, they store reserves and they deposit reserves with the Federal Reserve. Now, the Federal Reserve was created in 1913. And from 1913 until 2007, how did it work? Banks would keep reserves with the Fed, and they would get paid zero, nothing for the reserves. There was a requirement. It was typically about 10%. So if you're a big bank, let's say you've got $100 billion in deposits. You were required to keep $10 billion with the Fed. You didn't get paid any interest on it. You just had to keep that there because it's what's called fractional banking, which is you had $100 billion of deposits. 90 billion of it you'd loan out. You'd loan out to individuals. You'd loan it out for home mortgages. You'd loan it out for car loans. You'd loan it out to small businesses. So of the 100 billion in deposits, you didn't have 90 billion of it, but you were required to keep typically about 10%. Just keep it with the Fed, so that if Ben Ferguson comes in and says, "Hey, I want to withdraw $1,000 because I want to go buy a nice present for my wife," they had to have the $1,000 to give you. So that's the way the system worked for almost 100 years. Then, starting in 2008, when you had the great financial crisis, Congress changed the law, and the Fed began paying interest on reserves. So the reserves that the banks kept with the Fed, they began paying interest. Now, at the time, the interest rate was incredibly low. And so 2008, you had financial chaos everywhere. Do you know how much the Fed paid in interest on reserves in the entirety of 2008?
How much?
About $1 billion. So in big picture budgetary terms, a very small amount. It was almost nominal, but it was the first year they began paying interest on reserves. Since 2008, they've been paying interest on reserves going forward, and it was small. It was small most of the time until the last 2 years of Joe Biden. And the last 2 years of Joe Biden, the interest rate went up and up and up. And for both 2023 and 2024, the Fed paid over $100 billion in interest on reserves.
Wow.
Last year.
And by the way, that's just pure tax dollars. You're paying